So in this video, we're going to talk about different order types. Now, there are a few different ways that we can actually enter the market. The different ways we can actually trade are via market executions, buy and sell limits, and buy and sell stops. So a market execution is where we actually manually execute a trade. It's where we physically click a buy or sell button to trigger a trade on a currency pair in real time. So that is the way that I trade most of the time. Some people actually do use the orders though, the pending orders, more so. I personally think market execution is the most accurate way to actually make sure we don't get into losing trades, because we can wait and see if the market is really going to do what we want it to do. But sometimes there are times where the other orders can be very useful and can get us some pinpoint trades. So the other ways to trade are via pending orders. And there are two different types of pending order. There are buy and sell limits. This is a market order that we can set and forget, and price will trigger us into a trade when it bounces from a preset level. Now, the other side is a buy or sell stop, and this is essentially the same. However, we're not looking for it to bounce. We are looking for price to pass through this level. So some examples then, because it might be a little bit confusing right now. Here are some little graphics of that. So buy limits, when price comes down, we have an order set at this level, okay? And what we're looking for is for price to tap that level, which will trigger us into a buy trade, and then for price to continue back up. So we do this at levels where we expect the market to reverse. Now, they are a little bit risky because we are essentially buying into a drop, which means that if you have a buy limit set at this level and the market came down and just went straight through it, you're going to lose. Okay, so this is why I actually prefer to use the manual execution, because we can see, is the market turning over? And yet we'll get in a little bit later, but it does improve our accuracy. So that is a buy limit. Price comes down, taps a level that we set, and if it taps that level, we are triggered into a buy, hoping to then continue the move up. The sell limit is the flip side of that. We set a sell limit at an area above price where we are looking for price to tap into before coming down. So if this happens, we're triggered in there and we profit from this price fall. However, the same risk stands where if price comes up and just goes straight through it, we'll be triggered into a sell trade and then we will lose. Okay, so that's a buy limit and a sell limit. They're essentially the same thing, but one is to buy, one is to sell. Now, a buy stop and a sell stop are generally used for breakout trades. Now, I never actually trade buy or sell stops. I don't really see the use in them because of the way that I trade. A buy stop will trigger a trade, a buy trade, when price pushes through that level. So if we set this, say, above price, and then price comes and taps that level, we will be triggered into a buy. Okay, and then if price continues going, we'll profit from that move. Now, the flip side of that is a sell stop, where we put it beneath price, and if price pushes through the level, then we profit from all of the movement that happens past the sell stop level. Now, same kind of risk here. If we have a buy stop and the price comes up and forms this kind of movement, then we are going to get triggered into a buy, and then price will fall and we will lose. Now, on the sell stop, we trigger the sell stop, and then if price moves back up, we are going to lose money. So that's actually why I like to use the manual execution, the market execution method, more than these pending orders, because they do come with risk of just getting tapped in and then getting wiped out. You don't want to buy a level for it to just fall straight through. Same, you don't want to buy a level for the price to then just fall away. You need to see confirmation. Okay, so these can be useful sometimes, and we'll see how they are. I'll show you some examples of when we can use buy and sell stops, buy and sell limits. Well, probably not these. I don't use these, but these ones I will certainly show some examples of. But generally, we will be looking to market execute. All of this you're going to learn throughout the course, so don't worry. But these are the different order types for you to just get familiar with and get to know. So nice and short and sweet video. In the next one, we're going to talk about different trading styles and different time frames that we can trade on. This is quite an interesting topic and something we'll definitely dig into. And then we'll pretty much be done and ready to actually get into the course. So hopefully you're enjoying the Forex fundamentals so far. Hopefully you've learned the basics of the market to this point at least, ready for us to actually move into the course and begin learning how to trade these markets. So thanks for watching, and I'll see you in the next video.